What's going on, everybody? Bitcoin Bros back at you guys with another live stream. So we have these live streams every Thursday at 8 p.m. Eastern Standard Time, and that's 5 p.m. Pacific Time. It's going to be every Thursday. We're going to be talking about Bitcoin strategy, getting into some of the Bitcoin treasury companies as well. We do have a special guest coming on later today. That's Dan Hillary from the Microstrategy True North Group. So he'll be coming about halfway through the interview, talking a little bit about MicroStrategy and where he sees the market currently. If you have any questions, leave them in the chat. And yeah, we also will have some special guests coming to the channel over the next couple of weeks, having some pretty interesting interviews. So be watching out for those as well. And we'll go ahead and get started into the charts. I'll let Sean go ahead and dive into those.
All right, what's going on, guys? We got episode 5. Before we get started, just PSA, everything we talk on here is just, two guys on the internet giving our ideas. It's not financial advice, as we are not financial advisors. So let me get our screen share up and let's go. I think we're good. Okay, taking a look at the Bitcoin price chart. We talked about this in our video yesterday that was posted regarding this price action. The main level to pay attention to is that we need to get above and stay above comfortably is that 106K range where that orange line is. We came back up back in late 2024 and tested these levels. That's when we made the 107 high and came back and put a higher low in or a higher high in before ultimately rejecting all the way down to 74,000. Now, do we think that we're going to go that low? It's a high probability that's not the case, just because of all the pent up buy pressure that we're seeing. There's a lot of institutions that are getting in, retail still buying. So these dips may be few and far between, but the green box is what we want you to pay attention to. If you look at this indicator below, we've been following this very closely, and this indicator basically every time it flips below the green or the blue flips below the red line, we're seeing the either price action have a drop down or a sideways consolidation, potentially even farther. Now, we've had this reset. We could have this come back down to the mid area before getting a reversal. So this is something you have to pay attention to. When looking at these charts, we can see from the RSI, we've had some type of bearish divergence, as you see right here. We put a high in back in March of 24 and then a higher low, while the price put in a higher high. This is textbook bearish divergence, which on the macro, this could cause further downwards price action, but the price continues to put higher highs and higher lows in. So the bear market is not here yet, we don't believe, but just focusing on these green boxes, if we have some sideways consolidation, we could see this indicator below, which is the Fisher indicator. If you want to get that, it's on TradingView. We could see this potentially have some sideways chop in this green box. There's no guarantee that we'll come back down to the 92 range, but wouldn't be surprised to see the mid 90s again if that happens. Once again, it's not guaranteed. It's not financial advice, but if we do get this somewhat of a retracement, what do we see? We see this shoulder, a potential another shoulder coming in with a big head. What we see an inverse head and shoulders pattern. This has been playing out since really November of last year. So right now things are pointing down as far as the Fisher indicator. We could get a little bit more relief to the downside when it comes to the RSI. So just keep in mind, we are in an area where we could get more drawdowns, but we'll see where the market opens up. If we get back above this 106 level, this could just be a temporary buy opportunity, a cool off before a continuation to the upside. So that's what we see with Bitcoin. Next, what we're going to look at we're going to take a look at MicroStrategy. And there's been a lot of gripes about MicroStrategy as of late. There's been a lot of Bitcoin treasuries that have been outperforming MicroStrategy. And MicroStrategy hasn't been the fastest horse in the race, but it is still the 500-pound gorilla in the room that people need to pay attention to. We'll get into more finer detail on what's going on with MicroStrategy. Once again, we got Dan Hillary coming on to discuss. But as far as the technicals go, this still looks very healthy as far as technical analysis looks. This seems to be some type of pennant or flag pattern that we broke out of to the upside. And, we're not going to go straight up to hit these technical targets. Could MicroStrategy go up over $1,000 for the rest of this cycle? Most definitely. We could see that. That's just roughly a 3x from where we are right now. Once again, it's indicative of what Bitcoin does. MicroStrategy has been outpacing Bitcoin because it just has. It's a levered Bitcoin play. But as far as other Bitcoin treasuries, you got to think of it like, it's the law of numbers. If you have a $100 million company, basically, starting their Bitcoin treasury and being very aggressive, using, strategic ways to get more Bitcoin yield per share, their market cap and overall stock valuation will increase faster than MicroStrategy. That does not mean MicroStrategy needs to be counted out, as this is going to be one of the most, if not the most valuable company in the world when it's all said and done. But the technicals are looking very healthy. Not much has changed here. We'll see what happens because we had this pullback from Bitcoin. Bitcoin, as you see, is right around 101.4. This was right after the market closed. We had a minor sell-off. So we'll see where this opens up tomorrow. So that's MicroStrategy. Things look pretty healthy there. The next one we're going to take a look at is Metaplanet, MTPLF. This has been having extreme volatility over the past month to month and a half. As you see, just back in early May, we were around $3.50 and then had a massive run up all the way on this chart up to about $16. But in all actuality, I think it was in the German market. If you look at DN3, which is the German ticker, you see this one all the way up to $22 to $21. So definitely something to pay attention to as MTPLF is in consolidation mode. And if you look back to the left of the charts, we see from December of 24, we hit our head here, came back up, retest this upper trend line once again. And then once we got back over above this level, this was extreme euphoria. It did not hold. So you can consider that still acting as some type of resistance. So level to pay attention to if we do come back up would be between the $10 and $11 range, depending on when we get back up to retest that. But all in all, anything under $10 with this stock is definitely going to be a good long-term hold. Not financial advice, but they have been aggressively buying Bitcoin. And right now they are at almost 8,900, 8,888 to be exact. And I believe less than 2 months ago, they were at 5,500 Bitcoin. So they've almost doubled their stack within a 3-month window, which is what they've been doing since they started their Bitcoin treasury strategy. So this definitely looks like anything under $10, definitely a buy opportunity. Once again, that's what the Bitcoin bros are looking at. And the last one we're going to talk about today is the blockchain group AltBG. This is a French company for those that aren't aware. I know a lot of our viewers are based stateside, but you can get exposure to this. Don't think just because it's international, you can't. We know MTPLF, as far as Metaplanet goes, is the US ticker, and AltBG or blockchain group does not have a US ticker right now. They potentially will be getting one in different markets, so look out for that in the future. But as far as this overall price action goes, this is a very small valuation company in comparison to even Metaplanet. Right now, I think they're sub $500 million as far as their overall valuation. They just made a buy this past week and almost doubled their Bitcoin stack. I think they're a little shy of 1,500 Bitcoin, have been extremely aggressive, but you see the parabolic rise in the stock price. Even back in early April, this was 37 cents. And since then, we've had a huge appreciation. And at the current close, it's been an 1,000x gain. So that's I'm sorry, not 1,000x, 1,000% gain, which is a 10x from just about 2 months ago. So this is an up and coming Bitcoin treasury company that has some really interesting ways that they're going about accumulating Bitcoin. We'll be talking about this more on our channel. So just stay tuned for that. But if you are a shareholder of this company, they have their annual general meeting June 10th. And what this means is there's only a few days left to vote to be able to raise their capital capacity by 10 billion euros. So this is definitely big for the company. We talked about this in previous videos too, but if you're a shareholder, you can definitely vote to get this capital raise approved. And if you look at the CEO, he is going and basically doing his marketing campaign. He was at the Bitcoin conference in Vegas, and then shout out to Korea, and was also having keynote speaking there. So he's making the world aware of what this company's doing. So if you're not paying attention, it might be something to just look at. And as mentioned, we will be going more in depth as far as what that company's doing on our channel. So that's what we see right now.
Cool. Go ahead. I can go ahead and share the actual Bitcoin companies that we're looking at, Bitcoin treasury companies. Talked a little bit about AltBG here, but this chart here gives you a good representation of what all these companies are doing. Shout out to Roaring Ragnar on Twitter. He's the one that put this together. But you can see Strategy, Metaplanet, saylor, AltBG, KULR, and SWC. These are some of the biggest Bitcoin treasury companies that are actually trying to do what Strategy has been doing. So raising capital, trying to raise that Bitcoin per share. Not every company that holds Bitcoin, for example, GME, Tesla, some of the other Bitcoin treasury companies, they're not doing the Strategy playbook. These are the companies that are doing it. So you can kind of just take a screenshot of this and compare. And one thing you'll notice here, which is really interesting about AltBG, we're just talking about them. If you check out their debt here, you can see the debt is at $132 million, but it's denominated in Bitcoin. That's because they have these Bitcoin denominated convertible bonds, which is really interesting and is really different than what Strategy, Metaplanet, SMLR is doing. So they're actually raising Bitcoin through their convertible bonds, and they're having a strike price, which is 30% of whatever their strike is, 30% higher than their stock price. So they're raising Bitcoin. So in the event of Bitcoin going down, let's say Bitcoin goes to $10,000, they're going to be able to, if they would ever have to pay that back on these 5-year notes, they would pay back the Bitcoin at the current value of BTC, which is really interesting because it kind of helps their liquidation price. Helps their liquidation price because Bitcoin goes down to 10,000. They just have to pay back that Bitcoin at $10,000 if for whatever reason Bitcoin is at 10K in 5 years. But on the upside, they're capped there because these convertible bonds have just like a 30% premium normally. At least that's the first raise they did. So those investors who gave AltBG their Bitcoin, they would get that back in shares. So it's a really interesting way, and we'll dive deeper into this. We have a couple of exciting interviews coming up around AltBG that you guys would be able to check out and learn more about. And it's just a very different way to do some of the convertible bonds that we've seen in the past, from what Strategy started and what we've seen Metaplanet and Semler and some of these other companies. Even GME had a convertible debt offering continue to do so. I think it's very innovative, and I think that AltBG is a company that everybody should be looking a little bit deeper into right now in terms of the Bitcoin treasury companies. And you get a lot of other interesting stats on here. You get the sats per share, sats per dollar of share price, and also like the BTC bought per day. Microstrategy is blowing the competition away. They bought 330 Bitcoin, Metaplanet at 21 per day, and then it goes on and on. But as you can see, Strategy is still the huge winner here, and they just are laying out this this playbook for all these other companies to follow. But some of these other companies are going to have huge gains in the future, especially if we see Bitcoin go to $150,000, $200,000 this year. We just wanted to show that. Is there anything you wanted to add on? Talk about this chart here, Sean?
No, this is the first inning of this, guys. For most other companies, Strategy sort of has a 4 to 5 year lead when it comes to Bitcoin acquisition. So you're going to see some of these new companies that are popping up. They've been doing this really over the past little over a year. So right now is an optimal time. Don't feel like you missed the boat. Metaplanet is, they've been talking to Michael Saylor. Simon's been sitting down with Saylor and sort of getting some feedback, sort of like a brief mentorship as far as what these companies are actually doing. So there's a lot of opportunity in the space. Once again, MicroStrategy, because it is the 500-pound gorilla in the room, this is not something to be discounted. They have over $100 billion market capitalization, and they have been developing, multiple financial products that can help lever up their share price and also continue with their Bitcoin strategy. We do not think that MicroStrategy is going to be caught, but there will always be other opportunities in the market. That's the only thing that I had to say about that.
Yeah, I definitely agree there. And it's the first inning for a lot of these Bitcoin treasury companies, but it's also still, it's still very early in Strategy. Just to talk about, they had the Stride STRD IPO, and their initial offering was around 2.5 million shares, and that was raised to 11.7. Getting some feedback there. But yeah, they raised it from 2.5 to 11.7 million shares for a total raise is going to be around $1 billion, which is just massively bigger than what STRK and STRF started off as. So with these offerings that they're doing with targeting the fixed income market with STRD, STRK, STRF, these are all very new. And as time progresses and as these products get more mature and people grow and have confidence in them and more money flows in from different institutions and from retail investors as well, we're going to see Strategy be able to take some of that money, buy more Bitcoin. And all of this is very early. I mean, with Strike and Stride, or with Strike and Strife, I think they've been around for under 6 months. Stride just had their IPO. They raised $1 billion. So that billion is going to go into Bitcoin. So I think it's just very early as well for Strategy, along with the S&P inclusion that's probably going to be coming in the next 3 months. If not in the next 3 months, definitely over the next year if Bitcoin does perform well. So don't take your eyes off of Strategy. I think it is still pretty early. I think they will be the biggest company in the world one day. It's just a matter of holding through the volatility, because it will be volatile because Bitcoin is very volatile. You just have to ride the wave and hold through all the noise. So yeah.
It's basically Saylor's strategy isn't just, well, it is about buying Bitcoin, but it's just not solely about that. It's actually about leveraging basically a corporate balance sheet to convert the melting cash into the superior money asset. And they're doing this in a variety of ways, from using their corporate cash to buy Bitcoin. They're issuing debt, convertible notes, secured bonds. and they're doing the ATM, and they're sort of structuring that a little bit differently now with these new vehicles, which we hope to get into with Dan in a little bit. But Strife, Strike, and Stride, they can hit the ATM. Why not diluting the MSTR common stock shareholder price? So that's really accretive for common shareholders. So these new vehicles that they're probably going to be releasing more, as Saylor tends to surprise most with this. This wasn't even discussed at the Bitcoin conference as far as Stride goes, but these are definitely major game changers when it comes to accretion to the common A shareholder. So just keep that in mind. They're going to keep amplifying their Bitcoin exposure per share. And as the price rises, so does the intrinsic value of MicroStrategy stock. So it's exciting times we're living through, and you should definitely not discount what Saylor's doing just because the company has did an 100x as far as the overall valuation. They could do another 100x from where they are right now today. Will that happen within the next year or two? Most likely not, unless something catastrophic happens with the dollar and we see some type of flight, for safety into Bitcoin and strategy. But as a long-term investment, it's not something to be discounted. And remember, all these other companies are buying what Saylor has had a 4 to 5 year head start on getting, with that Bitcoin being the underlying asset. So there's only 21 million, and there's not enough Bitcoin to go around, not to just every person in the world, but these companies are gobbling it up left and right. Crazy statistic, like since 2024, I think there's somewhere north of over 3 million Bitcoin that's been bought in less than 2 years. So if you extrapolate that out over a 5-year window, 10-year window, pick your time frame, you can understand how the law of scarcity and why the Bitcoin flywheel for strategy and some of these other Bitcoin proxies, as far as these treasury companies go, is going to just be up and to the right.
Yeah, and just wanted to share this really quick. Last week, I know you talked about a little bit. You did an analysis on the real estate market versus something like Strife. And what Strategy is doing here is they're targeting the bond market. And I think everybody's like, oh, Saylor wants 1% of that $300 trillion bond market, as you can see right here in this graphic. But also, I think some real estate investors are going to be looking at Strategy or some of these strategy offerings and saying, well, if I can just buy Strike, or if I can just buy Strife or Stride or any of these new offerings and get an easy 10%, 8% with Bitcoin upside, I think a lot of money could flow out of real estate and go into some of these offerings as well. So if you look at it that way, they're not just targeting the $300 trillion bond market, but they're also targeting the $330 trillion real estate market, which it just makes the market even bigger. We know these markets are going to continue to grow in 5 years. That's $600 trillion of value today, but over the next 5 years, I'm sure that's going to grow to over, 1 quadrillion, which is an insane amount. So if Saylor can get 1% of the 1 quadrillion of the real estate in the bond market in these products, that's going to be $10 trillion into Strike, Strife, and Stride, which is really bullish. But I mean, that just 1% doesn't seem like that much. And if he's able to rotate that into Bitcoin, I mean, it's you can see Bitcoin's in this chart is really small. It's only $2 trillion market cap. So with a fixed supply of $10 trillion of capital flows into the market, I think that's when you're going to start to see like Bitcoin overtake gold, Bitcoin hitting millions of dollars a coin. I think it just takes time. So
yeah. So before we continue, for those that are here, appreciate your support. Make sure you smash the like button and share with friends and family. But yeah, so that the traditional hustle over the past 50, 60 years, people have just been buying Bitcoin. I'm sorry, not Bitcoin, buying real estate and really using that as a store of value and also to get yield and building real estate empires. So with some of these new vehicles that MicroStrategy has been putting out into the market, it may actually take away from what traditional real estate investors were trying to do, because it's a lot easier to manage and maintain just cash sitting over in a vehicle where you don't got to worry about property tax, don't got to worry about upkeep as far as your real estate goes, or tenant retention. It just seems like a no-brainer when it comes to the new investment. So with that, I think we're gonna pivot here in a second.
Yeah, definitely. We have a member of MicroStrategy True North, Dan. He'll be joining us here today. How are you doing, Dan? Gonna mess with the screen here.
Good. How's it going, guys?
Pretty good. Give me 1 second here, Dan. I'm trying to get the screen. Oh, get Dan big on there. Yeah, how you doing, Dan? For everybody that's watching, most of you guys probably know Dan is a member of MicroStrategy True North Group. Great insights on Twitter, X, around MicroStrategy, and we're just going to be asking him some questions about MicroStrategy, some of these Bitcoin treasury companies, and get his thoughts on everything that is going on in the space. So thanks for coming on here, Dan, and definitely want to pick your brain here today, man.
Yeah, appreciate that, guys. Sean, Aaron, a pleasure to meet you. Looking forward to, talking shop here for the next hour or so.
Yes, sir. All right, so we're going to start off. We're going to get into strategy and Bitcoin, but we want to know, have you looked into some of these other Bitcoin treasury companies, like Metaplanet or any of the other ones? And what are your thoughts on any of them? Are you investing? Are you staying away? Are you just focusing on strategy and all their products? What are your thoughts there?
Yeah, I'm a pretty much a strategy Bitcoin guy, but a lot of that's for tax reasons. But just because I don't want to, realize too many gains. However, with the other ones, it's really interesting to look at the kind of structure of the reverse mergers, which a lot of them undergo. So Metaplanet's different, right? Metaplanet has kind of an origin story, much like strategy, where there wasn't a reverse merger pipe investment into an existing public entity takeover situation, right? It was just a hotel business that then was desperate during COVID and started, adopting the Bitcoin treasury strategy. So there weren't kind of inside investors that are incentivized to sell upon, full realization of that exit liquidity. Whereas with a lot of these other companies, there are kind of incentives for insiders who got really good terms when they entered the pipe, which is a private investment private investment in public equity. So they got really good terms entering the deal. And when the company or the public investment IPOs, they essentially become liquid on a huge amount of unrealized gains. And so that brings a lot of sell pressure in the market. So when these reverse mergers happen, you have to be really careful with kind of the dynamics in the market, because there's a lot of incentivization for selling, right? If you're a pipe investor, you're up 10x on one of these on your investment, you're not going to sit there and hope it goes up another 10x. You're going to turn around, you're going to put your short position on, even if there's a lockup period, you're going to sell the stock short, reap your gains, lock in your gains, and you're going to tell your investors like, hey, 10x, like let's do this. So that's kind of, you have to understand the real deal structure of the different businesses before you hop in. But that's to say, I think all Bitcoin, a treasury made up of Bitcoin is a very, very valuable asset for any corporation.
Gotcha.
Okay, so we'll sort of pivot from there and get more into, what MicroStrategy's been developing and some of the vehicles they have on that side of the fence. So let's start with Strike and Strife. On the value of those two vehicles for like principal appreciation, you emphasize that you hold Strike not primarily for its yield, but for its potential principal appreciation. So especially over the next 16 to 18 months, if interest rates remain flat or decline, can you unpack the specific market conditions or catalysts beyond interest rate movements that you believe will drive this appreciation? And
Totally.
to piggyback on that, how do you assess the trade-off between both of these fixed dividend yields?
Yeah, just for reference, are you guys real estate guys? You guys are like real estate, like, are you ex real estate guys that kind of got into Bitcoin? Or are you guys like diehard Bitcoiners from the start?
we've been Bitcoiners for about like what has it been 7 years now? So yeah, Bitcoin.
Okay, you're diehard Bitcoiners. I just saw that last question. I was like, oh, are these guys? But you're totally right. You framed that last question really well in this question here, and I think we'll get into it later. That like Strike and Strife are really an attack on both the fixed income markets and the real estate markets, and I think it's going to draw a lot of capital away from those, income producing investments. But to answer your question, so Strike Strife, why do I hold them for principal appreciation? Well, the main reason is simply because I think the market doesn't quite understand the products, and there's a couple different things at play here, right? To even believe Strike and Strife are valuable, you have to believe that Bitcoin is a durable asset that isn't going to go to zero. So if you believe that, then you can start to enter into the realm of understanding or investing in Strife and Strike. The thing about Strife and Strike is that you're actually not making, well, Strife in particular, you're not making a directional bet on Bitcoin. Your investment is over collateralized by Bitcoin about 10-1 on Strategy's balance sheet. And so there's a whole host of terms that explain what you'll be owed in the case of Strategy's insolvency, how much of their Bitcoin you'll be owed. Essentially, right now, the liquidation preference is $100. So if you own one share of Strife, which is Strife is let's use the term crown jewel. So in Strategy's capital stack, they have priority is the convertible notes. Those are senior, those are private placement. As a retail investor, you can't really access them other than the ETF BMAX. Okay, next is Strife, and that's the 10% fixed coupon perpetual preferred. And that is kind of their most secure, most over collateralized Bitcoin backed instrument. So if you own one share of Strike, you're entitled to $100 of Strategy's Bitcoin in the case of their liquidation, and a $10 annualized coupon. So every year you get $10 for every $100 of Strike you own in quarterly coupon payments, dividend payments. And this is really atypical in the market, right? So because it sits at the very top of the capital stack, it's again 10-1 over collateralized by existing assets in the balance sheet. And right now, the yield on Strife is about 10%, right? That's just where the market's pricing it. And this would be a kind of C-rated distressed bond level yield. However, this bond is effectively 10-1 over collateralized, not by future cash flows like most corporations, but by existing assets on the balance sheet. And it's easy to track that over collateralization by looking simply at Strategy's capital structure, which is present on their website and in their quarterly reports. So there's actually a huge amount of security in owning Strife relative to other fixed income products. And the market's pricing it like some sort of high risk, almost bankrupt, foreign bond. And I don't believe that to be the case. So if you think these credit instruments are credit worthy, then you would own them with the idea or the belief that the principal will appreciate. And for anyone who doesn't know how these things work, so the yield on Strife is $10 per year, right? And Strife trades at a dollar value, much like an equity, like any equity, right? So right now it's trading at $100. So every year you get paid $10 in dividends. That's a 10% yield. If the market believes it's a very safe and secure sort of fixed income bond or preferred equity, then they're going to price it up. So the price will appreciate from $100 to $150. And at $150, the yield on Strife, that $10 yield, will be closer to 6.5%. And that 6.5% yield is kind of where I believe it will start being. That's more of a AA rated bond. That kind of yield. So that's a 200 basis point credit spread, and I think it'll trade closer there to that price in the near term. The near term being 1 to 1 year, a little bit plus, maybe more than 1 year, but who knows?
You had mentioned that the market hasn't really fully ingested, let alone what these vehicles are that saylor's developed, but the value of Bitcoin. You would think that'd be the case, seeing what Microstrategy or Strategy's done over the past 4 or 5 years by simply just putting Bitcoin on their balance sheet. Mm-hmm. So when do you think that cascade event's going to happen? Where right now we're getting a small subsection of the overall, private markets, public companies to put Bitcoin on their balance sheets or start their Bitcoin treasury. When do you think that event's going to be when it's from a small percent to 10%, 20%, or just a standard of having Bitcoin on your balance sheet? Do you think that's going to be another cycle from now, or are we going to just see it ramp up over the next 12 to 24 months? What's your thoughts on that?
Yeah, I think it's gonna be slow. I think it's gonna be slow because there's gonna be negative. There's gonna be a bear market at some point. That may be in 2027, maybe in 2026, maybe in 2028, maybe tomorrow, maybe had started today. I don't know, but there's gonna be real fallout for a lot of these companies that think they don't have to have an operating business and they can just lever up on Bitcoin. And so you could argue that Strategy doesn't have a meaningful operating business, but I'll get into that later. I think they have a monopoly on the Bitcoin-backed fixed instrument market, but there's gonna be some fallout of people just boosting their valuations because of they can inject Bitcoin into a publicly traded micro cap reverse merger stock. I don't think that means Bitcoin on the balance sheet is a bad idea or it will go away. I think Bitcoin on the balance sheet is here to stay, but it's going to take a while, like anything, for companies and corporations to adopt it with, corporate governance structures, all kinds of things. So I think it's going to take longer than we think. I think it's going to take longer than we think, but I do foresee a future in which, Bitcoin in a treasury makes a ton of sense. Much like in the analogy I use is, most companies hold treasuries on their balance sheet, but most companies aren't banks. And so that's the way I think about Strategy and other companies using Bitcoin treasury strategies.
Interesting. That's a great answer. I want to get back to Strife a little bit. So I think you said if Strife trades up to 150, it would become like AA rated, and the yield will go down to 6.5%. So is that why they're doing like Stride, because Strife is becoming more legitimate of a product and still being able to offer that higher yield? Is that why they're doing that? And then if that is true, is the reason? I mean, if they continue to do that, are we going to continue to see more and more of these fixed income offerings in the future? Is that something that you think about? Or
I think that's a really good question. And so Stride is their most okay. So I messed up my wording a little bit there. So if the free market assigned Stride's value, if it pushed the price of Strife up to $150 and it was yielding 6.5%, that means it's equivalent to a AA rated bond. However, none of Strategy's products are rated currently, and the ratings would come from an auction house like Moody's or Standard & Poor's. And when they rate a credit instrument, that's usually how the yield is determined in the fair market. And so right now, there's no rating on Strategy's debt instruments. Maybe if they get included in the S&P, that will advance that process. I'm not sure. That aside, Strife, the way it's constructed, is highly, highly secured. It's highly, highly over collateralized. So Strategy's designing it to have a much lower yield than a product like Stride. And so Stride, for me, it totally changed my thesis around Strategy, and it made me a lot more assured for a lot of different reasons. But Stride is essentially a junk bond, you can think of it, whereas Strife is the most senior over collateralized, worst case scenario, you get paid out bond. And so they sit in different positions in the capital stack. So they have different hierarchies. So it's convertible notes, Strife, Strike, which is the convertible preferred stock, and then Stride. And I don't know if you saw today, but Stride was 4 times oversubscribed in their IPO on Fidelity. So there's going to be $1 billion of that issued in the coming month.
Yeah, we did. We spoke on that right before you joined. So as far as when it comes to Stride and Strike, the way, I think about Strife is more operating like, a high yield savings account, if you may. And then, Strike, they give $8 a share, but there's a convertible upside there. So that's definitely advantageous for, some investors. And then we just sort of briefly spoke about Stride. When it comes to your investment thesis, how would you say you're positioning yourself across these 3 products, and how maybe a newer investor that's just getting started, should they be looking for more volatility and just buying the common A shares, or should they be positioning themselves? I know age probably has a lot to do with that, and also how much, their net worth is as well. But how do you process, stepping through your investment thesis with these other vehicle offerings now?
I think that's a really good question and something people have to think about. And so Strife, I think you said it perfectly, right? It's a high yield savings account. And where we are today, there's a lot of principal upside for the reasons I mentioned earlier. So I think Strife is just a great, secure investment for a fixed income investor, someone who's coming over from maybe you have a 60-40 equity bond portfolio and you're looking to allocate into a high yield, highly over collateralized bond. Strife is for you. Strife is for you. Strike is also, I think Strike's a fantastic product, right? So you have, the way I think about it is it's trading for about $100 right now. You get $8 annualized dividend, and you have a conversion rate of 10 shares of Strike into 1 share of MSTR. So the way I picture it is you have about $37 of your $100 of Strike is exposure to MSTR common stock. The other $63 is cash on which you yield the dividend. So in my opinion, I think Strike is actually more undervalued than Strife, simply because that dividend, the way I think about it again, is that dividend is paid on the part of that offering that doesn't represent MSTR Class A because of the convertible option. So you're getting closer to a 12, 13, 14% yield cash on cash if you were going to be holding common equity anyway, but you have to want to hold the common equity. And then Stride's more for institutional investors or people who have serious conviction in strategy and want that really, really high yield. And I'm actually not sure which bond funds. I know there are some bond funds that have high yield kind of over collateralized preferred equity in their covenant. So there are certain people that are really searching out instruments like Stride. For a retail investor, I see no reason not to enter into something like Strife or Strike with what I believe to be more principal appreciation for the time being. In a year, what will I own? If I want a fixed income product and Stride is offering a higher yield, I will be in Stride because I believe in the creditworthiness of strategy itself.
And then to piggyback on that, right now, within the bull market, is the thought process still the same once we have that, that euphoric peak, whenever that comes? It could be this year, next year, 2027, as you mentioned. In a bear market, how should people maybe rethink their positioning and sizing on the way down?
Yeah, I mean, I just think it's so hard to know so hard to tell. And I think there's a lot of indicators this cycle that maybe we don't go as high as people think, but we don't go as low as people think either. So I think there's a real reality of that, as the market continues to mature and becomes more of an institutional asset class. So how do you position? Well, I think all of these products, the way they're trading now, have that dividend, that coupon feature. And as long as strategy manages their leverage ratio, which any individual investor can keep tabs on with Strategy's dashboard, then you have kind of a put, that bond put. Likely that yield gives you downside protection. It's not likely Strife will go to a 15% yield or a 16% yield, or Strike for that matter. So it gives you downside protection. So if you're very, very nervous about a bear market, but you still want exposure to Class A MSTR common stock, I think Strife's your best bet. It's your best bet. You get unlimited upside exposure with a portion of your holdings, but you have that bond downside that can really, really protect you in the case of a bear. And if you believe interest rates will continue to decline, that's actually upward pressure on that preferred equity itself.
Makes perfect sense. I saw, so to kind of pivot a little bit, I saw a clip on Twitter where Saylor was talking about if we can use Stride to support a much higher MNAV instead of using like the MSTR ATM, or if the MNAV in the future would ever go below 1, they would also think about using Stride. Is this something that you would think they would be able to raise more funds in the bear market with Stride to accumulate more Bitcoin? And is that something they also will be able to do? I know in the clip I saw, he was specifically talking about STRD, but do you think STRK and STRF will also be highly, people would want to invest in those in the bear market as well, that would allow them to, raise Bitcoin if their MNAV is below 0 or below
Yeah,
1?
this is that's a really good question. I think the most important part about Stride, and I think this is the question everyone was asking. So what happens if strategy trades at a discount? And it was very relevant when the Chanos short report came out and people were smashing the stock. It's like, okay, it's a bear market. Everyone wants to short it to 0. What happens if it trades at a discount? They can't generate yield via their common stock ATM. Their leverage ratio is tapped out, because the key with the converts, strike, and strife is they all have to be highly creditworthy, over collateralized instruments. So they can't have them be more than about 30% of, call it all debt, right? That's all debt. That debt, convert, strike, and strife, can't be more than 30% of the outstanding value of their Bitcoin holdings, just for credit reasons. So in a bear market, if they're tapped out on that leverage ratio, they couldn't in good faith go out and issue more strike and strife to buy back their share or to increase their Bitcoin yield. So if they were tapped out on their leverage ratio there, and their common equity was trading at a discount to their Bitcoin holdings, they'd have no way to generate yield. They just have to wait it out. And that would be really bad, in my opinion. And it's something I was really, really concerned about. Why does Strife change that game? Strife changed that because in such a scenario, they don't have to honor the 30% debt ratio rules with Stride, because it's explicitly a lower risk form of debt, because they can miss coupon payments. There are very few examples historically of preferred equities that miss payments, while preferred non-cumulative dividend preferred equities that miss payments while the company's in good standing. But the option to miss the payment in case something really catastrophic happens means that Strategy can issue more of their debt ratio with Stride. So they're maxed out at 30% with converts, strike, and strife. They can do another 20% with Stride and when they sell that Stride and collateralize that Bitcoin, they can use those proceeds to generate Bitcoin yield, to buy back their stock and capture that gain. All of that will kickstart the equity again, and we should be kind of out of the danger zone. It's essentially a defense mechanism against short, saying, if you short us below 1 MNAV, we will use Stride to buy back our stock, boost it back above 1 MNAV. You're not going to get us stuck there, right? And that's what the shorts want. They want to get them stuck down at 1 MNAV so the Bitcoin yield goes away. And Strategy wants to boost up their premium so they can get the Bitcoin yield engine kicked back on. And Stride, again, is the only way to do that, because they can increase their leverage ratio with that product, because it sits below strike, strife, and the converts.
It's definitely going to be interesting to see when that bear market does come with these new vehicles that are available to the open market. What optionality that gives Strategy on on the way down for Bitcoin, because historically MicroStrategy has outpaced Bitcoin on the way up, so it's been more volatile to the downside as well. As a lot of people seen in December of 24 up until just as of late, but it's going to be a very interesting bear market to see if Bitcoin has the traditional 70-80% pullback, but because of this new optionality that Saylor has created, they might not get as big a drawdown, or if it does happen and that MNAV does go to 1 or potentially below, it could be some type of V-shape, spike up in the price in the short term during the bear market. So that's definitely interesting stuff there.
Totally agree. Yeah. And I think one more. Do you mind if I add one more point on that? The interesting thing about Stride is that since Stride sits below strike and strife, if they sell Stride and buy Bitcoin with it, so they sell 1 share Stride and buy, let's just say for the sake of argument, 0.1 Bitcoin, that Bitcoin added to their balance sheet now sits below strife and strike. So strife and strike and the converts become even more collateralized when they issue Stride. So Stride is essentially like a sacrificial vehicle for strife and strike. And therefore, it's going to have a higher yield. The market will price it with a higher yield than strife and strike. However, as an investor, you still may be confident in the future outlook of Bitcoin, and that's why you buy Stride. So I just wanted to add that in there. It improves the creditworthiness of the other instruments.
Yeah, definitely makes sense. So let's talk about the impact on some of the traditional, real estate or traditional market investor mindset. With these, fixed income product offerings that Strategy has, could you see the overall investor sentiment change when it comes to traditional real estate? Most real estate investors are getting a 5 to 10% APY when it comes to dealing with, all the other headaches that we mentioned earlier on, such as the property tax, tenant management, repairs, etc. Could you see a pivot in that mindset, an actual shift in capital when it comes to where people are parking their money, instead of earning that yield or store value in traditional real estate, transitioning to some, I guess you would call it, digital property instead of physical?
I'd imagine. I think that stabilization of the volatility is something that a lot of the sophisticated investors were looking for. Because if you run a big fund, it's not that maybe you do believe in Bitcoin, but the mandate of your fund is such that you can't experience a 30% drawdown in a month, right? Like traditional Bitcoin. So a product like Strike would be fantastic, or even Strife, high yielding product with limited downside and limited volatility. And that's just a institutional version of maybe, your mom and pop shop. Like, let's say you're just, a wealthy landowner, homeowner, and you have a bunch of commercial properties, multifamily residential properties, and you don't like dealing with the headache. I mean, you have to first become comfortable with Bitcoin as collateral. Once you do that, obviously Strike and Strife become extremely attractive. But I think it's a big leap, and it's going to take people a lot of time, right? If you're used to seeing the value right in front of you of a multifamily property, it's going to be difficult to convince someone that this magic internet money is in fact the same or even more pristine collateral to park their investment.
Cool. So where do you see Strike, Strife, Stride, any new fixed income products? How much? Because we know Saylor says he's targeting the fixed income market. He says that he wants 1% of that fixed income market. I think it's around 300 trillion. So he wants 3 trillion. Where do you see Strike, Strife, Stride, any new products that may come in the future? Do you think they'll be able to hit that 3 trillion goal? Or is that too bearish? Do you think they'll get more of the market, or do you think 3 trillion is way too high for these products in the future?
I mean, fixed income's weird. Like, it depends on the price of Bitcoin and Bitcoin's future CAGR. But if Saylor turns out to be right with the 29% CAGR for 20 years, then as long as they continue to issue these over collateralized yields, there's absolutely no reason why the fixed income market wouldn't start pouring into his products. We're seeing that with the increase in ATM activity of Strife and Strike every single week. And fixed income's a lot like, people are just looking for secure yield in the fixed income markets. So if he's offering that, there's not a lot of like, if it's over collateralized, stable, reliable yield, fixed income investors over a long period of time won't argue, they'll buy. And so as long as he issues, yields that are higher than the going market rate with a better collateralized, over collateralized product, I don't see why not.
Nice.
They could jeopardize it though, right? That's the risk of owning any equity, is they could over leverage their stock. They could do something to undermine the creditworthiness of the company, and that could be, their downfall. But that religious sort of execution of their Bitcoin accumulation is what has allowed for such creditworthy instruments to be issued in the market. And if they keep on keeping on there, then I see it being possible.
Cool. Makes sense. So just to pivot back to strategy a little bit, for the everyday investor, people that may not even fully understand Bitcoin, don't fully understand MicroStrategy yet. I mean, I think people are still trying to wrap their heads around what strategy is doing exactly with all these new products. I'm sure a lot of people are confused that don't have the time to dive deep into what all these, Strike, Strife, even strategies doing with the ATM and all the stuff they're doing. And then on top of that, people don't really even fully understand Bitcoin yet, the average investor. So what do you think people need to understand about either Bitcoin or MicroStrategy or strategy to get more average everyday people invested in this product to take advantage of where strategy could potentially be going in the future?
Well, you got to understand Bitcoin. And then once you understand Bitcoin, I think you have to understand the appetite for yield. And I'm not the best at explaining Bitcoin, so I'll leave that to you guys. But I think understanding that there's a real appetite for yield in the market, even if you yourself, because that's kind of the disconnect. There's a lot of Bitcoiners that don't understand like the need for fixed income yield for, retirees or pension funds or, just sort of high net worth individuals or hedge funds, you name it. And so the Bitcoiners don't understand that well, whereas the fixed income investors don't understand Bitcoin. So that hybrid is going to be a really big and important intersection. And I think the yields will speak louder than the words. Like if Strife is yielding 10%, if the market allows Strife to yield 10% for 2 years and it's met every dividend obligation, if Stride is yielding 12% for 2 years and it's met every dividend obligation, like people want to get paid. That's really what they want. And so I think the market will be forced to learn about these sorts of products, much the same as MISTI or IMST. Like people just see the yield and pile in like they're falling lemmings off a cliff. So
there's been a lot of new offerings over the past 6 to 9 months, and I think the learning curve is a never stopping revolving wheel. You have to keep re-educating yourself. Like, okay, you have this down. Okay, now what's this new one? Like when Stride was released, me and Aaron were sitting there like, it's another thing to go down a rabbit hole and spend some hours to see exactly what this is and how it can be utilized and good for the markets. So yeah, to wrap this up, the last question we wanted to ask is, everybody knows that we're in a bull market, and there's a lot of different price predictions out there when it comes to Bitcoin. There's a lot of people thinking that the 4-year cycle, looking more towards the end of Q3 or early Q4, as far as that blow off top, if you may. Where do you see the market going from here? Do you believe it's going to be? Do you still believe in the 4-year cycle? Do you believe we're going to sort of have an elongated cycle into potentially 26, 27? What's that look like for you?
Yeah, I just have annual compound growth targets, average annual compound growth targets that I keep track of. And anything outside of that, any deviation from that, I believe to be kind of a cycle. So if we were to hit 300K a coin, 400K a coin, I would say, yes, like the 4-year cycle is very much intact, and we could see a massive drawdown. But if we were to finish the year around 150K Bitcoin, I think things would be on pace. And because I'm expecting Bitcoin to compound at right now a little bit over 38%, slowing down to about 30% in 2030. So I just keep track of those long-term compound annual growth rates. If you're above or below, I mean, it's a good time to maybe lighten up, but it's never really a good time to lighten up. But when you're well below those compound annual growth rate targets, that's when you back the truck up and buy a bunch of options. That's at least what I do.
Nice. Cool. Well, thank you, Dan, for coming on. Do you mind sticking around for a minute? We're just going to wrap the live stream up here.
Yeah, totally, guys.
Cool. Just going to wrap the live stream up here, guys. Thank you, everybody, for joining. We have live streams every Thursday at 8 p.m. Eastern Standard Time. Make sure to subscribe on YouTube. We have new MicroStrategy Bitcoin content coming out every single day. We have a couple interviews, special interviews coming up in the future. So make sure to check those out. Be watching out for those. Anything else you want to add, Sean, before we go ahead and call it?
No, that's it. We'll see you guys again next week on the live stream, and just keep stacking.
All right. Thanks, guys.